Are you still not certain how the budget speech actually affects you as an investor?
Now, the factors that influence the market. Currently, the economy is expected or projected to contract by 7-8%, which is the GDP. The interest rate has dropped to 7.25% from 9.75% in January. The repo rate has dropped to 3.75% from 6.5%. And these rates are this low. It is the lowest it has been in almost 5 decades. And it is unprecedented for things to happen like this. Simply because in the past, when the economy went down, whether the markets crashed, whether there was a recession, when there was a serious decline in the economy, the interest rate would go up. I'll just remind some of you who would remember. Remember the recession, the world recession that we had in 2008, 2009, a little bit of 2010. In that recession, the interest rate went close to 13%, if not more than that, and people could not be able to afford to pay their houses, mostly the investment extra properties, because of the rates that were too high. And now that then forced people to sell. The property market was booming in terms of auctions. The auction property market was booming because houses were repossessed and being sold because people couldn't keep up. Now, we can go back even to the Great Depression in the early 1900s, the 20th century. The interest rate went up when the market went down. So this is one of the first time in a while, it is still being researched. It's possible that even in history, that when the market went this drastically down internationally, that the interest rate in most countries have been dropped. But now we're sticking to South Africa. Now, what then does that mean? It means you pay less for the property, the same property. If I can make an example, if you bought the same property in 14, 15 months ago for 500,000 rand, you would have been paying between 5,000 and 6,000 rand. But today you buy the very same property, you'll be paying 4,000 rand, just over 4,000 rand, depending on the interest rate, but you'll be paying on average just over 4,000 rand. That, my dear brother and sister, it is a 50% decline on monthly repayment. Now, what does that mean? That then simply means it's a big influence in the market. It's a big influence in the market because what you're going to pay now is going to be less than you would normally pay. And then the third factor is the trade, and because of the lockdown, so the trade is not, which is another flex factor influencing the market. So the trade is not going on, so it is the lockdown influencing it. Estate agents, we spoke about them as a role player and how they influence the market as well. Now, whose market is it? Whose market is it? Yep, you got it right. It is the purchaser's market. Enjoy looking for a house. I hope this webinar helps you to understand, helps you to plan. Yes, there are talks that the interest rate being dropped might be a trap. There are talks like that. Yes. To a consumer, yes, it's a trap. To a consumer, it's a trap. A consumer is a person who just wants to use, and not invest. They have an extra amount on their credit card, they go buy new shoes. That's a consumer. They have an extra amount they're paying less on the house, or they've got extra money, then they go and buy more furniture. That's a consumer. But not to an investor. Now, on our next webinar, we will be addressing that fully to say how can you take advantage of that, of the low interest rate during this lockdown.
So seeking to buy or sell property? Come to the YDT Group. Contact us on 051 430 5293 and visit our website at www.ydtgroup.co.za. And also don't forget to check our cool YouTube channel for our webinars.